Hey everybody, thank you for coming today. Today we're going to be talking about how to achieve financial success in your new business. So, the first thing we're going to talk about is not neglecting your personal finances. Personal credit matters, so your personal finance matters. Most lenders review your personal credit and your personal credit history, which includes your personal credit score before extending or deciding to extend credit to you. It doesn't matter what your entity structure is. You can be an LLC, sole proprietorship, or an S corp. However, you still remain the personal guarantor for that business's line of credit until that business begins to build its own credit. Being a personal guarantor just means that you are personally liable if that business credit card or that line of credit was to ever come into become delinquent. This means that while you're building your business, while you're in the middle of building your business or before building your business, you need to continue to work on your personal credit. So what does that mean? That means that you need to always be aware of what your personal credit looks like. So if you have to pull your credit reports, you can do that free every year. You can pull from all three credit bureaus to ensure that everything that is reflecting on your credit is accurate. Anything that's not accurate, you need to dispute those things and get it off your credit to maintain a healthy credit report and a healthy credit score. Do things like get a secured credit card. If you're in a stage where you need to rebuild your credit, then get a secured credit card. Be diligent about paying your bills on time to those lenders that report to the credit bureaus, and you just want to make sure that you are keeping your personal credit at the forefront while you're building your business credit. The next step that you can take and while you're building your personal credit is to start to build your business credit. So the first step that you need to take in building your business credit is to obtain an EIN number. So what is an EIN? An EIN number is basically your business's social security number. And you use this EIN number to give to any people that you work for as an independent contractor, any merchant systems that you use for your business, Stripe, PayPal, or things like that to begin to build your business credit. You will also need to incorporate your business. So whether or not you choose LLC or S Corp or C Corp as your corporation, you would need to do that with your state. Also, you need to open a business bank account. In order to open a business bank account, you would need that EIN letter that we told you needed before. So after you apply for your EIN letter, just Google IRS EIN, and you will walk through the process of getting your EIN number. They'll give you an option of downloading your EIN letter or having it mailed to you. I recommend just go ahead and downloading it because you're going to need that to present to the bank in order to open up your business bank account. You're also going to need those articles of incorporation that you applied for through your state. Usually once they approve your incorporation, you will get the notification and you will get your articles via email or in the mail. So you're going to need those two items in order to open up a business bank account. And then after that, usually or sometimes, those banks, while you're opening your business bank account, they'll extend credit to you. So maybe they'll offer you a business bank account, a business credit card, or maybe they'll offer you a line of credit. I suggest that you take those two options, whether they give you one or the other, take one. This gives you the option as soon as you're opening your business bank account to begin to build your business credit. This is a great option if you are actually given this opportunity because it means that your personal credit is at a state where they trust you enough to extend additional credit to you. So I suggest you do this to start building your business credit as well. Another way to build your business credit is to apply for lines of credit through vendors. So if you are a product-based business and you usually get your supplies from different vendors and different things like that, apply for lines of credit with them. It's a win-win situation. You probably will get a discount on the bulk supplies that you're already going to order, and you'll be able to build your business credit as well with a line of credit with them. In addition to this, you'll also maybe it'd be advantageous for you to apply for a DUNS number. A DUNS is a 9-digit number assigned to each physical location that your business has. And one benefit of this DUNS number is that it allows you to apply for different contracts and work for the government as a contractor. And throughout all of this, building your business credit, please continue to build your personal credit and or maintain it. Another option to achieve your business finances for your small business is to keep track of all the revenue and expense that's coming through your business bank account. So all the revenue that you're experiencing, that you're receiving from clients or products or services that you're offering, and the expenses that you're outputting through these different services and products and services that you're offering. So one way to do this, and I feel like it's the only way, is to track it through an accounting system. So there are a couple accounting systems that I could recommend, one being QuickBooks, Wave, and Xero. So I personally use QuickBooks and I personally use Wave. QuickBooks is a little bit more robust. I feel like it's built for the small business owner and it's built to grow with that small business owner. So it's for the small to mid-sized business owner, and it has everything that you would need in an accounting system. From the first time that you sign up, it gives you an introduction onto, what type of business you're running, what are you looking to achieve with this accounting system, and it begins to set the system up and cater it to your business's needs. After you set it up this way, then it'll allow you to attach or to link any business accounts that you have for your business. So that may be maybe one or two business accounts that you use. Maybe you have an operations account, and maybe you have another account that you use for your business. If you have one account, just use that account. I say link these accounts because it begins to automate these transactions coming from your bank account into this new accounting system. And this is basically the easiest way for you to get these transactions over. I don't recommend you manually doing this. A lot of people use Excel sheets, but it's a lot of manual error that can happen there. Manual error that can happen when using an Excel sheet. So I do recommend using a system that is automated because it really takes the responsibility out of the busy business owner's hands, and they're able to depend on that accounting system directly taking those transactions from the bank account, and when you're ready to reconcile, the transactions are already in the system. Or if you decide to work with somebody else, maybe a bookkeeper, maybe an accountant, the transactions are already there, and there's nothing that you have to do to get those into the system. So once you put those things in the system and you begin to move those transactions around, and you're able to say, okay, this transaction is revenue, this transaction is expense, and you're able to determine these transactions are fixed expenses versus variable expenses. So when we talk about fixed expenses, we're talking about expenses that are consistent. So things like rent. When we talk about consistent, I mean consistent in price, consistent in knowing that that rent is going to be due every month. And so it's a consistent expense that you're going to incur, or your business is going to incur every month. And then we have your variable expenses, and those variable expenses are expenses that are not consistent. So they vary, they fluctuate depending upon, maybe you have raw materials for that product that you're going to offer, but depending upon how many units of that product that you're going to move, then that is going to determine how much raw materials you're going to need. So raw materials would be a variable expense for you. So the next item that I would say is to create a budget and stick to it. So creating a budget allows you to have a blueprint. So it allows you to have it allows you to have a guide, right? It's going to be your guide, how to spend your money. You're going to tell your money where you want it to go for your business. So just like a personal budget, you're going to split your budget up between money coming in, which is revenue, and expenses. But within these expenses, I want you again to determine what is fixed and what is variable. Okay? These budgets that you're going to create is going to help you to make sound financial decisions. Because once you track how much revenue versus how much expenses you have coming in, you're going to be able to see whether or not your business is operating at a net profit or a net loss. And so if you're operating at a net loss, then you're able to look at your expenses, whether they be fixed or variable, and see which you can trim off, right? So of course we want to start with the variable expenses first, because those fixed expenses are the consistent expenses that we have. We know that those things need to be paid. So when it comes time to trimming your budget, when you look at your expenses, we want to look at your variable expenses first. And that leads right into the next point. It tells you where you can cut your spending based upon whether or not you can get those raw materials cheaper from another vendor. What does that look like? Is it directly, are your expenses directly, the increase in your expenses directly related to the raw materials? Or what is that related to? It shows you where you need or where you can grow your revenue. If you have different lines of revenue, say for instance, if you are an accountant, you may do taxes, you may do accounting, you may do bookkeeping, you may do consulting. Those are various lines of your business model that you offer, various lines of income that you have. And if you're in that accounting system, you can split those lines of income up, and you can see and you can determine whether or not, hey, bookkeeping is not doing as well as I thought it would be. I also don't like doing it, so maybe I can trim that, from the services that I'm offering. So it's very important to do that and to maybe split those lines of income up, because if you don't want to do something and it's not bringing in the revenue that you've expected to bring in, then it might be more advantageous for you to cut it out in total and bring something else in. It also creates funding for your business. So you can, by cutting those expenses back or adding another line of service, you may create funding for your own business and be able to create money from your own revenue and save money, and which we'll talk about later. The next point we just talked about savings briefly, so boosting your savings. A lot of business owners don't have savings accounts. Maybe they don't, some have them, some don't. And some people don't have personal savings accounts. However, I think it's very essential for, as a business owner or as personally, to have a savings account. As we say here, a savings account helps you to save for the future. They help you to save for emergencies. They help you to save for taxes. And you can save for your retirement funds. So just like a personal savings account, it allows you to save for future uses that you could use that money for. So we ran into a pandemic of a year, and that if the business owners that did have savings accounts, they were able to use those in order to sustain themselves. And because they were keeping track of their expenses, and they had a budget, they were keeping track of their expenses, they were able to determine, okay, where do I trim these expenses? What fixed expenses need to be paid first? And this is where I can take it from. So that's when you use your money and save it for expenses. Some businesses, maybe they're operating throughout the year, and some businesses flourished during the pandemic. So when you make more revenue, in addition to that, you owe more taxes, right? So that savings, if you save maybe a percentage of each revenue that you have coming in, maybe 30%, 25, 30%, then you're putting that in a savings account. It also allows you to save for unforeseen tax bills that you may have. You may not know, like when you go to file your taxes, if you're not tax planning throughout the year, that the increase in revenue that you've had is going to increase your tax bill. So because you were saving, a lot of my clients said to me, hey, I have this motto that I save 30% of all the revenue that I have coming in, and this allows me to save for this tax bill. And now, I don't have to use my own funds, or I don't have to use the funds that I don't have to pay these tax bills, and I can use these emergency funds. The last thing I'll talk about here is that saving for retirement. A lot of business owners don't save for retirement. So, if you're saving with the goal of saving for retirement, then you can use, other than a savings account, you can open up a retirement savings account. That can be another means of you savings for your business when you save for yourself as the business owner. And lastly, we'll talk about creating efficient systems for billing clients. So this is where we ensure that we collect monies from our clients. So creating efficient billing systems. There are many billing systems out there. However, I use the billing system that is within my accounting system. I find that to be more efficient because I can use my accounting system in multiple ways. So things like QuickBooks and Wave and Xero, they allow you to invoice your clients as well. So what does that mean? That allows for you to not leave any money on the table, because you can automate your billings. You can automate your invoices to go out. You can automate reoccurring billings to happen where you are not initiating the invoices to go out. However, your system is initiating. Your system is following up on any monies, that accounts receivable that you're leaving on the table. We want to do those things. So like we said, we don't leave any money on the table, and our accounts receivable always stays at zero. We don't ever want to forget that there's money out there that we have not collected. And so automating this process within your business can help you do that. It eliminates errors. Setting the terms for your business also allows for you to eliminate confusion between you and your client. So they understand the terms that they have to pay you. They understand the methods that they have to pay you. How can they pay you? They understand how to do that. So it eliminates any confusion or any misinterpretation that they would have about the billing. Okay? And that pretty sums up the discussion around how to achieve financial success for your new business. If you have any questions, please put those in the comments now, and we will begin to answer those. Okay? So Lorraine says, how do I budget if my clients are not consistent, or if I'm a new business and I don't yet have clients? So to you, Lorraine, I would say that, we spoke about budgeting on actual numbers. And in this circumstance where you don't have actual numbers to budget from, I would say budget for your goal, right? So if your goal is to have 10 clients, then I would say budget for 10 clients. And then once you receive those actual numbers, you'll be able to compare budget versus actual. And then when you do your next budget, you'll have actual numbers to budget from. So say, for instance, if you budgeted for 10 clients and everything in your budget lines up with you servicing 10 clients. So your raw materials, everything that's going into you servicing those 10 clients, you'll have in your budget. But then actually, when you do your actual numbers, say there was only 7 clients, right? Then you have actual numbers, and so when you go to create your new budget, now you can budget off your actual 7, and maybe you can put in a little bit more, maybe 8 or 9, depending upon how you're going to increase your marketing or how you're going to get more customers in the door. Okay. Any additional questions? All right, guys. So if you don't have any additional questions, be sure to reach out to us. You can reach out to us via email, which is taxinfo@wattbizsolutions.com. You can reach out to us via our website, www.wattbizsolutions.com. Or if you're on Instagram and you want to give us a follow, our handle is wattbiz. We look forward to working with you. If you want to book a consultation, you can do that as well, so we can get to know each other a little better and get to know your needs better so that we can service you better. Thank you so much for joining us today during this webinar, and we look forward to working with you.